Welcome, everyone. It's an honor to be here at Crypto Bahamas. I'm very excited to see everyone. Welcome to the future of U.S. crypto regulation, an area that all of us are focused on these days. And honestly, I would say not just the U.S., but I think a lot of us are looking at regulation globally. But the topic today is U.S., and we're going to stay on that, hopefully. I am Michelle Bond. I'm the CEO of the Association for Digital Asset Markets, which is known as ADAM. We're a membership. We have a membership roster. A lot of our members are here today. Super excited to see everyone. And I am joined by a very esteemed panel. I'm very excited to introduce them. We have Jonathan Levin, who is the co-founder of Chainalysis. We have Mike Castiglione from Eventus. He's the head of regulatory affairs. And we have Sigal Mandelker, who is a general partner at Ribbit Capital. So just to get everyone started, I think it'd be awesome if you could talk a little bit about how you came to be in the Bahamas today, what your background is, and talk just a little bit about what your role is and what your previous roles have been. If we could just spend a couple minutes doing that. I guess I should introduce myself first. So I ran regulatory affairs for Bloomberg. I was counsel on the Senate Banking Committee. I've spent my entire career working on policy, and I was a lawyer at the SEC after leaving private practice. So that's a little bit about me, but Sigal, I'm going to turn to you.
Great. Well, thank you, and great to be here. Thanks for those of you who are here and not on the beach. So I am Sigal Mandelker. I'm at Ribbit Capital. Ribbit is a global investment firm focused on fintech and crypto. I came to Ribbit about 2 years ago after spending a significant amount of my time in senior roles in the government. So most recently, I was the Undersecretary of Treasury for Terrorism and Financial Intelligence, which meant that I oversaw the U.S. sanctions program, OFAC, the U.S. anti-money laundering program, FinCEN, a policy shop, and intelligence agency. And I was also acting deputy secretary for a good period of that time. Also was a law firm partner before that. And prior to that, I spent a number of years in also very senior roles at the Justice Department and Homeland Security. And what brought me to Ribbit in particular, and then later on here to the Bahamas, was that when I was at Treasury, I would travel all over the world, and I would meet with heads of state and central bank governors, finance ministers, CEOs of banks, and in that time, it became increasingly clear to me that our banks had massively de-risked all over the world, and also that huge swaths of many different countries were unbanked. And I came to the conclusion that the only way we were going to fix that problem was through exciting, disruptive financial technologies. And so I set out to find the best possible place that I could do that. Ribbit's mission is to change the world of finance, and here I am.
Mike?
Well, first of all, it's an honor to be on a panel with Sigal and Jonathan, who've done so much during their careers to keep bad guys from exploiting crypto, and you, Michelle, who is a leader in wrangling the industry and setting high standards for everyone. I'm Mike Castiglione from Eventus. We are a compliance technology firm. Previously, I was in government for 15 years, focused on national security, including at the CIA. During the latter part of that time, I focused on emerging technologies and their geostrategic implications, the implications for country stability and global economy. And we informed the White House, Congress, Treasury, Defense Department on what we should do about it to mitigate the risks and grab the upside. And it was really there that I, in kind of analyzing emerging technology across the board, identified crypto as the potential. If we get regulation right, there's so much upside, especially for ownership and especially for the better alignment of incentives online. Why the Bahamas? So Eventus specializes in trade surveillance, and just this week we announced a deal with FTX that they globally will use our software to identify and prevent price manipulation on their platform. So it's been great to get to know the FTX team. They're really talented and have a super high capacity to execute. And thanks for having me.
Thanks, Mike. I also have the pleasure of getting to work with FTX and FTX US as members of ADAM, and we get to work together on a lot of market integrity initiatives. Jonathan?
Yeah, thanks so much for having me. Jonathan Levin, one of the co-founders of Chainalysis. We are the blockchain intelligence platform that powers a lot of the way that governments are able to investigate and follow the money when it comes to cryptocurrency. And we provide an AML compliance platform that helps all of the regulated businesses ensure that they can prevent money laundering on their platforms. And I got into crypto 10 years ago. I guess the question was sort of what is the genesis story, and I was the sort of first serious economist looking at Bitcoin in 2012, publishing some of the early research into really the game theory behind the security behind Bitcoin, and very quickly realized that actually sort of the biggest opportunity that there is in the crypto space in 2012 was to build a company that really knows the most about how and why people use this technology. And by assembling that information and providing it to sort of the most important stakeholders, we could build systemically the most important company in this space. And today, Chainalysis, we operate in about 60 countries around the world, including the Bahamas, serving this market. And what I find is that we can actually help build the future of a regulatory platform that protects people, investors, society in a better way than what is possible necessarily with old technology and traditional finance, and we can create sort of this vast new economy and platform for commerce for the future of the internet. And so, it's super exciting to come to a place like the Bahamas where, there are these newer initiatives where we can engage and sit with policymakers and sit with entrepreneurs and think about the way in which regulation should be for the future of this commercial opportunity.
Thank you. Thanks, guys. So just to get us started with, I think, one of the hottest topics that's happening in US regulation these days is the Biden administration recently put out an executive order in March. And it was the first time that we were able to really see the administration weigh in on crypto. So it was definitely an exciting time. We saw some really good phrases in there about maintaining American leadership and talking about innovation. And I think it was also really interesting because it seemed like the Biden administration really focused on a whole of government approach. And what they did was they involved everyone. So it was the federal financial regulators, the banking regulators, the national security agencies, the Treasury Department. I felt like they involved everyone in asking for studies and reports and recommendations. And this comes at an interesting time because here we are, in the Bahamas. The Prime Minister spoke yesterday. We're seeing heads of state weigh in around the globe. So prime ministers, we have an ex-president here with us today. What's your take on the Biden administration's executive order, and what do you think this means for the future of crypto? Sigal, I'm going to start with you.
Sure. So look, I believe that as a matter of national security, which is a space that I've lived in for many years, it is extraordinarily important for the United States to incentivize financial innovation, to build, to grow out of the United States. And I have many, many reasons why I think that's the case, but without a doubt, the country that captures, the countries, including the Bahamas, that capture this market, I think are really going to enable the future of finance to be built out. And so we're at this kind of existential point for the United States, which is, are US regulators going to decide that they want to adopt and embrace the technology, or are they going to, sort of enforce it out of the country? The great thing, the thing that makes me excited about the executive order is that there was a real recognition of that. So 3 out of the 6 objectives were financial innovation, global competition, responsible financial inclusion, responsible innovation. The others were illicit finance, consumer protection, all also investor protection, all very, very important and laudable goals. The question that we don't know yet is what's going to come out of the executive order. If all the different working groups that have been stood up in connection with the executive order, in fact, focus on this fundamental question, economic and national security question, which is, are we going to enable the technology to grow and build out of the United States? If they take those objectives and literally infuse them into everything that they do and think about how to build out a warm, welcome environment for this space, then I think there's going to be a terrific outcome. And frankly, the administration has really spent a lot of very productive time engaging with industry, engaging with innovators, builders, founders, probably some of you in this room, and that's really exciting. But it's too soon to tell because it's, as somebody who was a senior regulator, I know that the instinct of government is often to focus on risk and not to put in as much emphasis on opportunity. I like to say that I focused on both. But the challenge for the administration is, are they going to really see the opportunity and see the risk, the downside risk of shoving innovation out? Or alternatively, are they going to come up with frameworks that enable the industry to grow and thrive in the U.S.?
Mike?
Yeah, that's a great summary. On that point of government tending to focus on risks, in the whole executive order, the word risk appears 47 times, the word innovation appears 12. So that tends to be kind of like the government's emphasis on, rightly so in many ways, like protecting investors and the like, yet with the recognition that crypto is a transformative technology where we need to position ourselves for upside gain. Another thing that struck me in the executive order is the phrase, same business, same risks, same rules, and that applies to the mentality of there are ways to regulate financial markets, traditional finance, and it seems like the White House and regulators are thinking about how to apply those lessons going forward into the future of crypto. One more important thing about the executive order is issuing the executive order started a clock to have reports issued by the Interagency, National Security Council, and the like. And those reports are being researched and written right now. And by September, you'll see the first tranche of those reports. So we're going to have very soon a proliferation of government putting words on paper about crypto, way more than we've seen before. The thing about those reports is that once government puts words on paper, they become sticky. They're hard to change. So this is the moment to really engage in policy outreach. This moment right now could be the crypto policy summer, where this is the moment to engage with regulators, share our expertise in it. My sense from my time in government is you find the right ones, they're open to learn about the technology.
Yeah, and just to weigh in a little bit, I think that the first thing to say is that it's a tremendously positive thing for the industry. I think that the EO coming out and it, although the language was maybe not quite balanced, like the call to action was balanced and was about instructing, all of both the regulators and, law enforcement, national security apparatus to actually, take a balanced view and come up with some concrete suggestions. And to Mike's point, setting a clock on that is actually a very important thing because, as all of you working in government have experienced, there's not necessarily the same sense of urgency as there is in the private sector. And so, to see that, I think is incredibly important. I would say the general sort of atmosphere in DC, just to give you a sense, is one of an understanding that crypto is definitely here to stay. That's been a hard 10-year battle, which I know is for some people is hard to believe, but it is definitely a battle that's been taking place over that sort of length of time. And we're now at the point where, both Democrats and Republicans through this EO are understanding that actually, there is a good path forward. There needs to be regulatory clarity, and there is an understanding of some of these issues. So I think in general, like, that's how I would say it, and I think the willingness of a lot of the regulators to engage at this moment is a lot higher than it actually has been in the past.
Except when I was there.
Except when Sigal was there. Open season when Sigal was there.
So, yeah, we've noticed the same thing. I mean, we've been very engaged with policymakers across Washington and beyond, and there has been they've been warm, welcoming, with a real appetite to want to talk with Adam and the broader industry. So that's something that's very exciting to us. So I think we have to talk about the securities versus commodities debate. I think it's a big one that it really affects US regulation because of the jurisdictional split that we have between the SEC on the security side and commodities with the CFTC. So there's this never-ending question about, what's a security, what's a commodity, why does it matter? And certainly we've seen a lot more calls in Washington for there to be more authority given to the CFTC so that the CFTC can regulate the crypto spot market. So we're definitely at I think a pivotal time, and I'm curious to get your thoughts on what you think it should look like, and just, do you have thoughts on just this, the jurisdictional line, or where the debate should be and where it should end up? I will start with you again, Sigal, and move down.
So I left government, so I don't have to get involved in turf wars, but I actually don't think we're looking at it the right way. I think the most important thing that we should be thinking about from an investor protection perspective is the following. What are the attributes of this fundamentally new technology, right, that can help protect investors in fundamentally new ways? So right now in Washington, the debate is it the SEC or the CFTC? If it's the SEC, then you have to register. Are they going to allow you, if you're a security, who knows? Are they going to allow you to register? I don't know. If you do register, what do you have to do? You have to file a massive amount of paper in Edgar. And for anybody who's been in that world, that's also a massive amount of money for lawyers. Is that what we need to do here? That's really the biggest question from my perspective. Or should we look at the attributes of the technology that enable in many ways, in a more significant way, one of the fundamental precepts of our securities laws, which is disclosure, right? Everything that you file in Edgar, it's all about disclosure. Here you have an ecosystem where everything is open source and everything is transparent, right? And we really need to think about, are we even in the right world or the right framework to begin with? Shouldn't our regulators be focusing, instead of focusing on turf, shouldn't they focus on solutions that can help investors, that can give them better access to more products, and also shouldn't they be taking advantage of this technology like Chainalysis, Eventus, and lots of other things that can help and become crypto native themselves? It's a big problem in the government. Most people in the government are not allowed to touch crypto. So they don't even know, so they're making these rules and they don't even know what it is. And that's the fundamental piece that we need to change. My vote is for the agency that's willing to engage, that's willing to do that, that's open-minded, that'll sit down, meet with industry, allow them to experiment with them. FTX has a application pending before the CFTC right now to do really interesting, exciting things that are going to, I think, enable greater access to better products. Be open. Regulators should be open to those solutions. And whoever is going to be most open and willing to engage and understand the technology, and really, as I said, further U.S. interests by enabling growth through acceptance and guidance, that's where my vote would ultimately go.
Thanks, Sigal. We actually just filed a comment letter on the FTX proposal. Adam is very supportive, and we're seeing hundreds of comment letters roll in support, so that's very exciting. Mike, Jonathan, I don't know if you wanted to provide any additional commentary on this.
Yeah, it's like one big picture thing is like the purpose of getting regulation right is so that entrepreneurs can take risks and engineers can build with more confidence, that the rules aren't going to change kind of midstream, while also, of course, protecting investors and protecting national security and preventing bad actors from using the technology. So like one, I guess, optimistic theme and trend is that so many crypto projects and crypto companies are being proactive in building out their compliance stack, like even in this uncertain regulatory environment. So, practically speaking, however this all shakes out in the U.S., your business still needs a compliance strategy and has room to, kind of invest in your compliance technology to protect your users, to differentiate yourself from the competition, and to boost your reputation.
Yeah, just to add a little bit, I would say that, to echo Sigal's points, is that you've got sort of a regulatory environment where, even from the very early days of crypto, the CFTC did have jurisdiction over the market manipulation of the Bitcoin spot market because there were derivatives products already being built on top of that. And so manipulation of Bitcoin spot has always actually been sort of in the purview of the CFTC. And so, what we're talking about here is the framework of understanding, some of the newer use cases and newer products that are coming to the market. And I think the challenging thing for regulators is that, the space is moving very quickly, and it's not always totally clear exactly how these products are going to be used by investors and which ones are going to gain the most traction. I think the challenging thing that we have in the United States at the moment is that the builders themselves are nervous, and it's very hard for early stage founders with new, really exciting business models and profit sharing and different governance structures and different ways of raising capital. Like, that has to be the future engine of the U.S. economy. And so, getting that right under this joint split, and it is going to be somewhat split between, and it's not going to be one or the other, is something that I think is critical. And I think what it will take is a very constructive approach to engage and give guidance, rather than sort of some of the litigation and fear that it's currently existing.
Yeah, and it's interesting because I think obviously the CFTC already does have jurisdiction, and I think the question is, should the CFTC have more jurisdiction, and then that also kind of feeds into which parts of Congress would oversee. So there's that jurisdictional split between the Banking Committee and House Financial Services Committee and the Ag Committees in Congress, because the Ag Committees tend, that's who oversees the CFTC. So there's, so Congress is also involved in this debate, so it's super interesting. And I will say, I've been around for a while now, and having worked on Dodd-Frank, and the US has done this before with the swaps market. We had a split, and there was shared jurisdiction, and the swaps market is working. So I'm very hopeful for crypto. I think we're going to find the right solution. So I think that leads me to my next question, which is, do you think that existing regulatory frameworks work for crypto? I feel like we've seen some very prominent voices talk about how we don't need a new framework, that the existing framework does work. In fact, former SEC Chair Jay Clayton, he wrote a really thoughtful op-ed in the Wall Street Journal, and he said, you know what, like we don't need a whole new framework. We can use the existing framework and have it evolve. So that has been one perspective. But then we've also seen other perspectives where people are saying, hey, you know what? This doesn't work at all. Like, this is impossible. Like, we need something new, and this is what it should look like. Sigal, what do you think? I mean, you were, until very recently, at TFI in the Treasury Department. Does it work? What do you think?
So I think it can work as long as you have regulators that are open to giving a lot of guidance and working with industry, grant applications, grant charters, bring people who are, everyone who's in crypto who's ever applied for anything in the government. All they're saying is, please regulate us, please supervise us, and regulators need to start to say, okay, yes, we're going to do that. We at Treasury, right? We put out. One of my major objectives was to put more guidance out to the private sector than we had ever done before. And so, in 2019, we put out a very long guidance out to crypto saying, look, if your business model is A, you have to abide by the BSA. If it's B and you're just a software developer, that's a different story. So there are lots of different ways in which regulators today can embrace the industry and grant these applications, start working much more closely. And again, I'm biased, but FinCEN has been doing that actually for a very long time in a very productive way. At the same time, we have to recognize that our securities laws were stood up in the 1930s when we were still using the telegram, and that's not the app, right? That's the telegram that went boom, boom. The Bank Secrecy Act was stood up in the 1970s. The phone that we were using in the 1970s was the rotary phone. How many people here ever used a rotary phone? 1, 2, 3. Okay, so let me just explain the rotary. Oh, good. Yeah. The rotary phone, for those who never used it, you literally had to dial numbers like this. And do you know how our area codes were determined? I recently learned by density of population. So New York City is 212 because it took less physical effort to get there. That's when our laws were stood up. Now you have what I said before, is a massive amount of transparency, a fundamentally new way of operating. The key to financial services today is through your phone, and you don't have to know any numbers, you just press a button. So there are a lot of ways in which we need to modernize and take into account the attributes of the technology. But I also really believe that it's fundamentally within the authority of existing regulators to really help and move the industry, work with the industry. I believe that with tools like Chainalysis, actually, and with the incredible, software engineers that are building new tools, that we can do better than the existing system at going after illicit activity. I mean, it's just people talk about illicit activity in crypto all the time. The fact is, the illicit activity is being driven out because of these great tools, and engineers are building, all kinds of new ways to make sure that the system is safe for more people. So that's a very long answer to your question, but I think the answer is yes, but we also need modernization.
Thank you.
I think the other thing just to say on that is that, look, a lot of the regulation has to be principle-based, and technology neutrality is something that is top of mind for a lot of policymakers across, because we can't know exactly sort of what all the applications are, and so we need to establish really what are the attributes of a particular offering and treat those types of offerings like for like. I think that there are definitely some holes, particularly on the security side, to think through how these different models are going to work eventually, and disclosure is very different in the crypto world than it is in the newspaper. And so, what I think, though, that Sigal is talking about is that the operating model that these regulators need to have has to change. And the change and the shift is, it's never been possible before that a regulator can proactively comb through and look at really all of the settlement transactions that are occurring on a financial system. It is now possible, from an anti-money laundering point of view, for the regulator to actually, without any reporting, go and proactively look for threats, look for ransomware campaigns or threats to national security, and develop cases to be able to bring that to law enforcement and to protect society. And that is a major shift culturally, technologically in these institutions that needs to happen as more and more activity flows on these networks, because the old days of receiving mailed in paper reports is not going to help us get to the level of understanding of this technology that we need in order to protect our society. And the good news is that we at Chainalysis, in partnership with a lot of our law enforcement partners around the world, have had tremendous success over the last 8 years, proving that actually you can take down sort of the biggest threats to our national security, the biggest threats to our children, the biggest threats to our society by embracing technology and partnering with the private sector, with all of the exchanges in industry to actually combat that illicit activity. And once that attitude is being embraced, then we can have this new regulatory paradigm.
Thank you. So we have just under a minute left. Jonathan, I'm going to keep you in the hot seat here. And it's only because you just left a hot seat, which was the Senate. So Jonathan just recently testified in the Senate at a national security hearing. Can you talk a little bit about what your perspective was from that hearing, where you think the Senate is falling on legislation, regulation, what their thoughts are, and how best to engage with Congress these days?
Yeah. So there's a clip of me going head to head with Elizabeth Warren that some people may have seen on Twitter.
2 million views.
Yeah. 2 million?
The things that you really want to get out of a Senate hearing are a viral video and bipartisan support for crypto.
Yes.
And I think we nailed both of those things. So, it actually worked out. It worked out very well. I would say like this, Senate Banking Committee, as we've spoken about, oversees a lot of the financial regulation in the US, and the good news is that there is bipartisan support on being pragmatic, encouraging regulatory clarity, pushing sort of the regulators to give concrete answers to the policy questions that Congress wants to have. And there's been increases of budgets as well for some of this capability. But yeah, I think we still have work to do. But there's a lot of education currently in flight. And actually, if you look at the whole testimony, which no one should ever do, you would understand that there's a lot of agreement in the room, and the viral clips are on the minimum.
Excellent job testifying, and it's really the first time that we're really seeing bipartisan support. So thank you for all of your efforts, guys. Thanks, everyone. We're out of time. Take care.